So historically, on Black Friday, the stock market tends to have a positive bullish trend day. Tomorrow, we're going to be having a short day where the market's going to be closing at 1 p.m. With that being said, the SPY is currently gapping up during extended hours, on track to open up higher than the previous closing price. Based off of the daily chart pattern that I'm seeing, if the SPY is gapping up, it's likely going to be a bullish trend day. If the SPY gaps down, it's going to attempt to have a bearish trend day. With that being said, I'm going to be preparing you to trade the best setups at the best prices possible. For those of you who are serious about making money within the stock market, make sure you're subscribed to this channel. I'm going to be giving you the best levels possible to be trading at. If you trade at these levels and use the unique trading strategies, the unique trading confirmations that you use to confirm if a key level is going to work within the direction of the trade, whether that's calls to make money as the market's going up, whether that's puts to make money as the market's going down, I can assure you, if you are applying what it is that I'm teaching to these levels, you should have a phenomenal green day closing out the week, very, very strong in the green, because in terms of this game plan, we are setting up for a phenomenal opportunity to be making money heading into tomorrow to close out the week, very, very strong within the green. So let's get straight into analysis. So in terms of the daily chart pattern, based off of what I'm seeing on this red, green, red overall daily chart pattern, basically, historically, I've studied how the SPY tends to react when it forms this daily chart pattern. If the SPY gaps up, which it currently is during the extended hours trading session, it's likely going to have a bullish trend day. If the SPY gaps down, it's going to attempt to have a bearish trend day. So in terms of the daily chart pattern, just going back historically, seeing how it normally reacts when it looks like this on the daily chart, that's what I have to say about the daily chart pattern. Now, let's get into the levels. Make sure you are trading at these levels. These are the best levels you can possibly be trading at heading into tomorrow in terms of what I can provide to you a day before the market's open. So with that being said, in terms of the levels, this is what I want you to understand, right? This is going to be very, very short, simple, and sweet. Let's get straight into it. So in terms of the overall SPY, this is what you need to be aware of, right? The first level is going to be the previous day lows. The previous day lows is going to be a strong level of interest to be buying call options. Now, if we are gapping down, make sure you are using very strong bullish 30-minute candlestick confirmations, because we could potentially have a bearish trend day. But the first level of interest to be buying call options is going to be the dip buying zone right here at 596.70 to 597.30. The next level above that is going to be the previous closing price. So the previous closing price is always a level of interest where I tend to trade at in terms of where the previous closing is currently priced at. This is a special previous closing price. So the reason why this is currently special is because the SPY is gapping up, and it is on track based off of what I'm seeing throughout the daily chart, and along with historically, if you look at the statistics, the market tends to have bullish trend days, positive days on Black Friday, right? So everything is currently aligning, right? But we got to wait to see how the market actually opens. But we are experiencing a smaller gap up right now. And in terms of this level, the previous closing price, which is going to be at 598.83, this is going to be previous resistance. So when the SPY breaks above a resistance level, or when the SPY gaps up above a resistance level, and once it drops back down to retest this previous resistance right here, which is also at the previous closing price, right? So you can see this is previous resistance, and then the SPY is having a gap up above the previous resistance, right? What can potentially happen is when the SPY drops back down to that previous resistance, to that previous closing price, and retest for the first time, it can potentially turn into the new floor, the higher support, right? For a phenomenal dip buying opportunity using that overall breakout and retest. So if you are seeing a pullback and you are seeing 30-minute bullish candlestick confirmations at this previous closing price, you're going to want to be dip buying calls at the previous closing price, especially if we are gapping up. Now, in terms of the higher levels, this is what I want you to understand. This level right here is like a make or break shift in overall trend level. This is going to be 599.60. So basically, 80 cents, a dollar above the previous closing price. This is like your make or break upper level. If the SPY is gapping up and we drop back down to this level right here, and you see it reacting as support, forming the bullish 30-minute candlestick confirmations, the bullish 30-minute candlestick patterns that I've been teaching you, right when we recap the overall trades, you're going to want to be buying call options at this higher level, especially if we are gapping up. So in terms of this level, this is where the trend can truly shift, right? So the lower level, this is the previous resistance to react to support. If the SPY retest, based off of what I'm seeing, if we do gap up, it's likely not even going to retest this level based off of what I'm seeing on the daily chart. It could potentially just bottom at this level. So this is going to be your make or break, basically highest level in a sense that I would consider buying call options. I'm really not too attracted in buying call options higher than this level, especially when the market's moving in an overall slower range and we're already having that big gap up and the volume's going to be lighter, right? So best case scenario would be a dip back towards these lower levels. But anyways, man, as you can see, this 599.60 level is a massive level. Look at this, man. The SPY quickly runs from 599.60 all the way to 602. This is a massive level. If this reacts bullish, we're going to be uptrending to the next level of resistance, which is going to be in that 601 zone. Break above that, react as a resistance, we go to 602. Now, this 597.50, if we're gapping up, is a strong level of interest to buy call options. In terms of the highest level above that I would consider calls. If we are gapping up, let's just say, this reacts bullish. What's the next breakout and retest level? The next breakout and retest level would be right up here at $600. That would be the absolute highest level. That's a resistance level. If the SPY breaks above it, drops back down, it's going to try to react to support if we are bottoming at 597.50. 597.50 is more of that dip buy, make or break zone. And $600 is basically that previous resistance to react to support. If SPY breaks above 600, reacts to support, then we're going to 601.30 to 601.70. That's the main analysis that I have for you on the call side, right? Now, obviously, if one of those levels is reacting bearish and we're cracking below, forming lower highs, reacting as a resistance, then we drop back down to the lower levels. But like I said, man, gapping up, main focus is calls. Gapping down, show some interest in puts at the upper levels. So in terms of upper levels, even if we are gapping up, just keep an eye on this level, man. This is a very interesting level where we could potentially see a small pullback, right? So the level is going to be previous support to react as a resistance, the breakdown and retest strategy. You have some support right here that has not been tested at 601.50. It reacted as a support level for 30 minutes, and then basically SPY had this little gap down. It reacted bearish during the extended hours trading session. So the market is very likely, when those 601 puts go out of the money, very, very likely that once we hit 601.50, they quickly go back to in the money on the first initial reaction for a drop, for a nice quick scalp on those puts. So in terms of the main put trade idea, if we're gapping up, would be 601.50 attempt puts. Just be aware, if the market is gapping up, we're likely going to have an overall bullish trend day. The main focus is going to be buying the dips at the lower levels and using the breakout retest strategy towards, like I said, that's $600 and then that 597.50 dip buy. So that's the overall game plan. The 599.50 dip buy, not 597.50, right? So that's the overall game plan, man. Those are the best levels based off of what I'm seeing on the daily chart pattern. If we do end up gapping up, it is going to be unlikely that we go back to the previous closing price. Obviously, if we do, it's going to be an amazing level to buy calls. But if we do gap up, very unlikely that we drop under the previous closing price. Very unlikely that we even go back to the previous closing price. So keep your eyes on 599.40 zone, and then the resistance would be 600 for the breakout and overall retest strategy. And then the profit target zone would be into that 601.30 to 601.50. Then we could potentially have a quick drop at 601.50, but you'll find the trend if we are gapping up. But it could bring those puts from 600 out of money to back in the money. Be aware of all of that. Now, if we're gapping down, reacting bearish, this is what you would need to keep an eye on. For the market to start to flip a little bit bearish, we really need to go under $600, react as a resistance. We need to go under 599.60. But this is if we're gapping down. So if we're gapping down, below 599, we're gapping down. We're reacting bearish. You can keep an eye on 598.83, the previous closing price for potentially puts, right? You can keep an eye on even 599.50 for potential puts. And those would be the levels for puts if we're gapping down. Like I said, 598.80 and 599.50. That would be the main put zone. And if we're reacting bearish in between that zone on a gap down, we're on pace to drop back to the previous day lows. So like I said, man, in terms of really being bearish and going with those lower levels for puts, it would mainly just have to be a gap down based off of what I'm seeing on the daily chart. So if you use this information that I came up with in terms of studying the daily chart, studying the patterns, if you just looked at all the 30-minute, all the 10-day, 30-minute patterns, I'm seeing a lot of similarities, man. Where I'm telling you, it could just be something like this, where we're attempting to gap up, we have this small drop, and then the SPY starts to rocket, right? We have this gap up, have a small drop towards 599.60, and then the SPY starts to rocket. That would be the main overall play if we're gapping up to be buying calls at that 599.40 to 640 overall level. Those are the main trends. Those are the main patterns that I'm overall seeing within the market. Like looking at the 10-day, 30-minute chart, if you just compare this overall pattern right here, this is what it looks like to me, man. It looks just like this, and then we start to go up. Looks just like this, then we start to go up. So buy those fucking dips, man. 599.60, and then keep an eye on the 600 breakout and retest, man. I'm telling you, it's looking something like this heading into tomorrow. Something very similar to this. If we're gapping up, it should be an overall easy day to be buying the dips at those higher levels that I gave you on a gap up for a strong bullish close. So the main trading opportunity is likely going to be at market open. If you want to trade tomorrow, tomorrow's likely going to be a day where you get in at market open and you hold it for hours and then you just shut it off for the day, right? So that's going to be the main play. And then tomorrow is going to be the market open play, and you just hold the trade out for a bit and then you cut it and then you just walk away for the rest of the day. Likely going to be a slow overall close. So that's what you need to be aware of. You guys are well aware in terms of Team Roar, we have the best morning options trades you're ever going to experience, and we're going to absolutely crush it. Closing out this week, very, very strong within the green. If you would like to trade alongside us and get access to all of our 0-day options trade alerts, you know, there's many stocks on my radar that I'm not going to be reviewing within this video that are on my radar to potentially trade heading into tomorrow, right? We got a lot of stocks that are on fire, and their options, the 0 dates, are going to be expiring tomorrow on Friday for a lot of the tickers that I'm watching. So we're likely going to have a stock player to heading into tomorrow, along with this phenomenal game plan on the SPY, man. So that's what I want you to be aware of. If you're serious about trading alongside with us and making money, it's the first thing down below in the description. We are known for trading 0-date options. We're known for buying cheap, far out of the money options that expire the same day. We're known for selling them deep in the money for the biggest percentage gains. We're known for holding these trades longer periods of time for the bigger wins. In terms of the 0-date options trade alert system that we created, very, very simple. We don't use stop losses. We don't need to use stop losses. And in terms of far out of the money 0-date options, a great way to win is to not have a stop loss on. But we don't use stop losses. You don't need them. In terms of risk management 101, you can put in your entire position size, literally just starting off at one contract as your entire max risk per trade. If you're risking a couple percent of your account, you can put in your entire position size as your max risk per trade. Let it go to 0, expire worthless. If it doesn't work out, most you lose is what you put in to the option contract, which is the beauty of options, because you know exactly how much you're going to risk, how much you're going to lose when you enter that overall trade. The most you can lose is what you put in, which is your max risk per trade. These are the lowest barrier entry overall trades within the overall market, and they give you the highest risk reward, and they give you the biggest percentage gains. Very, very cheap, very, very low risk, very, very high risk to reward ratio, very, very big percentage gains. If you're holding, selling deep in the money for the bigger percentage wins. So sometimes when we're down like 30 to 50%, we cut the loss, but we don't use the stop losses. There's no need to it. You're going to get stopped out for a loss. Stop loss has the word loss in it. We don't like to lose. We remove the stop loss. We put in less money. We risk less. We let the trades play out. So we have the entire day to decide if we want to take the L or if we just want to hold the overall trade, sell it in the money. So like on a dead play, when we're down like 50%, we tend to decide if we're going to hold the trade or if we're just going to cut the trade. When we decide to hold that trade and not cut it for an L, it tends to come back to life later in the day, go in the money for a big percentage gain. So in terms of the wins, man, you're going to see every single month, we have 3 1,000% plus wins. When you have a 1,000% win and you're sizing in accordingly, that means you can have 18 50% losses in a row and still be net positive on the overall month. Every single month, we have 3 1,000% plus gainers on average. With that being said, you're going to see we're known for holding the trades longer. We're known for having the biggest percentage wins within the market. And you're going to see, man, when we buy these far the money option contracts, they tend to go in the money and we tend to sell them deep in the money. So if you want to experience a different trading system, what makes it different as well is, like I said, we remove the stop loss, but we do place profit stops. When we are green on a trade, we set a profit stop. Typically, when you're up like 10, 20%, you're going to want to set a profit stop. It ensures that it is impossible for you to go to green to red, right? So if you set a profit stop, you make money, you get stopped out for green. If you set a stop loss, you lose money and you get stopped out for red. We do the complete opposite. We put in less money, we risk less, we pay less, and we're still able to make more than other people putting in more money because the percentage gains are much greater, outweighing the money you're putting in. So you can literally risk less money and make bigger percentage gains, remove the stop loss, set the profit stops to ensure you don't go green to red, and we move the profit stop up higher. When we're green on a trade, we like to add to wins when there's a winning confirmation. So when we're up like 5, 10, 20%, we like to quickly add to winners because when we're up a small amount for us, 5, 10, 20%, we're well aware there's people who trade in the money options. They get in and out, scalpers at the speed of light for a couple seconds to minutes. They make like 5, 10, 20%. Well, over here, we're making 100% plus, multiple 100% plus, multiple 1000% plus profit returns every single month. Every single day, we're having multiple 100% profit returns. So we're doing the complete opposite. We have a far the money option system, and we move the profit stops higher to ensure that as we're holding the trade, if we're not selling the moves, which we tend to do, we tend to sell into the moves. But as we're holding the trade, right, if the market has a big move against us, we get stopped out for the bulk of our profits, not just green, but for the vast majority of the profits that we made because we're moving the profit stop up higher. So we're doing the complete opposite of what everybody else is doing. We have many members inside of Team Roar who are consistently making $500 to $1,000 a day. We have some members who are making 5 figures a week. We have some members who are making over 6 figures a month trading zero-date options. If you would like to experience a zero-date options trading alert system where you can trade alongside us, it's going to be the first link down below within the description. You can start trading with us tomorrow. I'm telling you, Fridays, they tend to be our greatest days. And you're going to see, man, when we are trading stocks on Fridays, the stocks that we're going to be trading, they're going to have their zero dates. The plays are fucking insane. This is literally the best time to get in, man. I'm telling you, this is going to be a very easy day within the overall market to be making money. I mean, just look at this SPY. We're currently having a very, very nice gap up. We're having a 2-point gap up here. It's likely going to be opening up higher than the previous closing price. So like I said, you're going to need to be targeting $600 and $599.50 for those potential dip buys. For the overall breakout and retest is 600. The overall best support level is going to be $599.50 if we're gapping up. If it fucking dropped to the gap, that's just a free fucking money play. In terms of trends you need to be aware of, the market has been having a lot of short-term reversals, right? So just be a little bit careful. In terms of gap reversals, this is going to be a little bit interesting. This 660.65 overall level is going to be a bit interesting on SPY. This is something that I wanted to add in as well. So, I mean, this is going to be fairly interesting, 665, right? But that gap already filled, so it's really not as relevant. But like I said, man, focus on those levels to be buying calls, 600, 599.50. You should have a phenomenal green day if you're using the 30-minute candlestick confirmations. Do not just blindly trade in at the levels. If I see an automation level, an auto buy level, where you can literally just get in because it's already confirmed in a sense, I will let you know. In terms of this video, I'm not seeing any auto buy levels, but I am seeing potential moves where, we are likely going to have a small drop first at 601.50 to back in the money for a quick scalp on puts. That would be the only scalp that I would consider on puts if we're gapping up, because it's going to be a bullish trend day, right? So that'd be one of the best levels. And that's just a quick scalp. But the main play is going to be those calls. And I'm telling you, man, I mean, you can even look at the gap would definitely be an auto buy level. If we gap up, 598.82 would be a gap up. I doubt it's going to drop back down that low. But even 599.50 is such a great fucking level. This is the higher level where you really need a strong confirmation is the $600. We could crack through that first. Then we could bottom here. Then we could spike back up. Then we could drop back down and then bottom at 600. That's how that could potentially play out. Listen, man, if you're serious about making money, it's the first link down below within the description. You gain access to our zero-date options trading alerts. You gain access to our real-time market analysis. You gain access to the real-time entries. When we set the profit stops, when we add to the positions, when we exit the positions, everything is the first link down below within the description in terms of our zero-day options trading alert system. If you'd like to trade alongside with us, we will see you tomorrow within the chat. We're going to absolutely crush it. We're going to finish out this week very, very strong within the overall green. I will see you guys within the chat. With that being said, I'm going to be signing off.